So as I mentioned, Gary Booysen standing by to talk us through those market movements. Not a great day on the local bourse. Gary just mentioning there that we closed just over 1/3% in the red. Financials not doing great, industrials not doing great. But globally, the picture was more or less the same in terms of seeing red on the market. What would you say some of the biggest contributors were today?
Yes, I think a little bit of nerves creeping into the markets ahead of some key central bank announcements. We've obviously got the big Fed announcement out on the 1st of February. We're expecting around 0.25% increase. We have our own local monetary policy committee meeting going on currently, and we'll hear how large the interest rate increase will be tomorrow afternoon. But yeah, a little bit of fear, I think, at the moment. We are also facing lighter volumes. Some of the Asian markets have been closed thanks to Lunar New Year holidays. And we've seen the dollar index just taking a little bit of a breather. So the US dollar getting a little bit weaker, not too much movement in the local currency. Brent crude coming back after a decent run. So we've had oil prices moving higher. I think this is on the back of the idea that the zero COVID policy in China is coming to an end, and that we're going to see China opening up. That's fueling expectation that we'll see more demand in the global economy, and I think that's probably why we're seeing some support coming through from the resource sector today. So that the only sub-index moving up positively, up 0.65%, while everything else was down on the day. So maybe a little bit of optimism around China opening up, but as I said, very, very low volumes because China is also currently closed from a financial market point of view.
You're saying the rand, not much movement on the local currency, but it does remain rather weak against the US dollar, Gary. And after such a positive run that it had just a few short weeks ago, one wonders what the short-term outlook for the rand is, and maybe consider the fact that we are in such a cloud of uncertainty when it comes to the power issues in the country at the moment. Do you think market participants are watching that in particular, and that might be affecting the currency?
Yeah, absolutely. So we've seen there's a clear correlation between load shedding announcements and the weakening of the South African rand. We're also underperforming against other emerging market currencies. So while the dollar has been weakening and we've almost been steady against the dollar, we have been weakening against other majors. If you look at it, load shedding is one aspect of it, but certainly I think the monetary policy committee meeting tomorrow, so the interest rate announcement tomorrow, is going to be absolutely key. It's a very split, I suppose, prediction at the moment with of the 20 economists that have been polled, around 8 of them think that we're going to get a 25 basis point increase. 11 think that we're going to get a 50 basis point increase, so 0.5%. And we have Morgan Stanley out on their own saying that we're not going to get an interest rate increase at all. So it's a very, very mixed messaging from the banking and the economics community. And that, I think, is also fueling a little bit of uncertainty that might come out of the market tomorrow after that announcement. If Morgan Stanley is right and we don't get an interest rate hike tomorrow, I think you're going to see the rand weaken dramatically. We'll see the rand above 1760 by the end of the day if we don't get an interest rate increase. If we do get the 0.5%, which is the current consensus forecast, that is the base case, then I think maybe a little bit of mild strength is in order. Just as that risk premium comes out of the market, you might see us just maybe dipping below that 17 rand to the dollar again. But to your point, load shedding, a big concern for growth in South Africa, and therefore a big concern for the currency as well.
I really hope Morgan Stanley is right, Gary. I'm going to say let the rand weaken for a little bit longer, as long as we don't pay more on our mortgages, okay? But anyway, some company news very quickly. TymeBank really doing well, almost doubling the customers that it has thanks to the partnership that it established with TFG. Your thoughts on TymeBank?
Well, it's growing incredibly quickly. Let's put it that way. So the bank is only 4 years old, and it's one of the fastest growing emerging market banks. I think it is the fastest growing emerging market bank currently, attracting, I think it's over 6 million customers, and starting to take on what we call our big 5 banks. And they've got some very, very interesting products. Obviously, the TFG being a major retailer, partnering with them and opening 600 kiosks in their stores, and that's assisted them to I suppose onboard all of these new clients. It is a compelling investment case. Shareholders can get a small exposure to TymeBank through African Rainbow Capital, which is obviously Patrice Motsepe's investment vehicle. So you are able to take a small exposure. You of course will get all the rest of African Rainbow Capital investments along with it. But yeah, definitely an interesting story. Whether there's space in South Africa for yet another bank, remains to be seen. And also the idea that they're partnering with a retailer like TFG MUFG, it's important because I think there is such a convergence of retail and banking and even telcos for that matter. They're all essentially offering each other services, and I think it's all becoming one type of business almost. So these kind of partnerships make sense. So we'll definitely watch it with interest and see how they develop. And let's hope our market is large enough to support six banks. I think competition is always good.
Competition is always good indeed, and as you say, everybody is doing everything at this stage in this market. Gary, thank you as always for your time this afternoon. That is Gary Booysen, Director and Portfolio Manager at Rand Swiss, joining us for the Markets Wrap.